All right, and we are back. The perfect storm for oil is definitely here. All these confluence of factors, problems with supply and demand, and the news just keeps getting worse. Just when you think it can't get any worse, it does. And today in the oil market, we had an absolute blowout. The WTI crude price dropped an astounding 10% today, down to $41.28 a barrel. I'm on oilprice.com. Brent crude dropped 9.44% to $45.27 a barrel. We are dangerously below the production cost for many oil producers, especially well below deepwater offshore, way below a lot of the higher cost U.S. shale oil producers. Oil sands are in trouble. Even the low-cost oil producers are feeling the pain now. They're not going to go bankrupt immediately, but if this continues or oil prices goes worse, it's going to be worse than 2008 because there is a lot more debt that the oil producers have compared to 2008. Also, the lower cost oil projects that were being brought online over the last 15, 20 years, a lot of those are gone and a lot have been replaced with higher cost oil. So even though shale oil production costs have come down initially when they were $100 a barrel, it took them quite a few years to bring it down with technology and innovation down to $65, $70 a barrel, and then we're down to around $50, $55 a barrel. According to some estimates that I've looked at in the last few months, over the last 6 months, different estimates, also with anonymous U.S. shale oil producers doing that survey to the Dallas Federal Reserve a few months ago that I covered, where they admitted that their break-even costs, a large chunk of the industry for shale oil producers was at least $50 a barrel for break-even, and another large chunk of the industry was $55 a barrel or higher. So unless those oil producers hedged, we are in big, big trouble. So OPEC did another massive oil production cut this week, and it's still fighting. In fact, there's a headline on oilprice.com. The main headline is that OPEC could disintegrate soon because there's a big argument with Russia, who does not want to cut oil production. And this is the problem with a lot of oil producing countries, these national oil companies, is so much of their government budget revenue is based on oil that when oil prices go lower, it's actually counterintuitive. But a lot of these oil producing countries actually need to maintain or increase oil production because they need more revenue. So rationally, you would say that these oil producers should cut oil production when prices are falling because they're losing money, they're not making a good margin. But in reality, with the oil market, the exact opposite actually happens. So we have a number of different stories here. There was a 1.5 million barrel per day oil price production cut, I believe, on March 5th that was announced. And in spite of that, the oil price did not react positively to that. The oil price still went down. And I think this video is going to get demonetized. It's guaranteed because it says coronavirus there on the screen. As you can see, Google reads the headlines for the articles. They have software that scans that. Also, I've only had 4 videos, I think, running that have paid me any ads in the last 3 weeks. So if there is an ad running, the chances are Google's probably taking most of the ad revenue anyway. The screen in my login section is a sea of yellow. I think I only have a couple greens now over the last 3 weeks. It's less than 4, I think, out of all the videos in the last 3 or 4 weeks. It's very, very little. But it doesn't matter because my Patreon account contributors are growing very, very rapidly. It's over 400 now, might be over 500 in the next month or two. It's growing very, very rapidly. A couple new people per day are signing up. So thank you very much for trying out my content behind the paywall at $5 a month. So we have problems in the real economy still. I don't believe any of the Chinese data. The Chinese Communist Party has done an absolutely superb job with the propaganda. The propaganda department, the 10,000 person plus propaganda department out of Beijing, has done an absolutely superb job lately of getting the Chinese coronavirus news totally out of the Western news cycle. And a lot of Westerners that I'm seeing on social media actually believe the Chinese data, which is completely and totally laughable. They actually believe the data, and they think that the flu is still much worse than the coronavirus. They have no idea what really happened in China in December 2019 and January 2020, specifically in Wuhan. How many people really got infected, how people are still being sent to hospitals in Wuhan. And Dr. Chris Martinson covered in his video last night a number of different sources that a second wave of people infected has respread in Guangzhou and potentially elsewhere because the Chinese government forced people in factories to go back to work. So the website that was tracking the Chinese economic data is capitaleconomics.com. It was free, but since they got an explosion of people signing up for their email newsletter and website traffic, thanks to recommendations from people like Shy Girl on Twitter, Tracy Shoechart, and by the way, she was supposed to come on for a podcast interview this week about the oil market. She had to reschedule the last minute. So I am trying to bring on oil experts. Robert Rapier was supposed to come on today for a podcast interview. He had to reschedule too. So we're going to try to get that to those interviews done hopefully in the next couple weeks. This is what's been happening now with a lot of guest experts that I've been trying, that have very busy schedules. They're very important people. They're making a lot of money. They have some of them have money coming in from multiple consulting jobs and a newsletter, or their money manager. So they're very, very busy. So I am trying to get oil experts on. I almost got Tracy Shoechart, Shy Girl, on. She had to cancel. She had a last minute plane trip to somewhere at the last minute, and that's why it had to get rescheduled. I think that interview was supposed to be yesterday. So I got, like, late Wednesday night, I got a message that she had to reschedule. So I am working on getting you guys expert interviews, trying to get on the right people. But people like her and others were endorsing this website for free, capitaleconomics.com, which is tracking the total confirmed cases in China each day, the economic data out of China, like the traffic and the coal power plant. My friend Jeffrey Landsberg at Commodore Research, COMMODORE Research, he has an email newsletter. I think it's mostly for hedge funds, and he charges them for it. And he is emailing me, because I'm on the email news list and I have a lot of good contacts. He's emailing me updates on how much the Chinese coal power plants are and the traffic in different Chinese cities. And, you know, things have restarted a little bit in China. There is an improvement over the last month or so. However, I would say that it's still alive, because there's a number of stories that have come out that the Chinese government is telling these factories that barely have any employees there, or no employees at all, the factory owners, to run the electricity, because they want to show the image to the West that they are restarting. But meanwhile, there's a lot of anecdotal evidence that the infection rate, the coronavirus in China, is starting to spread again, and there is a enormous demand collapse for oil, an enormous demand collapse for gasoline, an enormous demand collapse for jet fuel, an enormous demand collapse for natural gas out of China. Things are so bad in China that just this week it came out, a story on March 5th, that PetroChina has suspended some natural gas contracts, and it's due to a collapse in demand. And this is force majeure. So this is a technical default, and they defaulted with Gazprom, I think, and Transgas, and a couple other Eastern European state energy firms. So not good news. The force majeure issued the force majeure notice to suppliers of pipe gas. I'm reading it here off the press release. This article is from Chen Aisu and Jessica Jagannathan from Singapore Reuters. So suppliers of pipe gas and also one LNG supplier. Details of the force majeure notice could not immediately be confirmed. PetroChina, China's top gas producer and piped gas supplier, did not immediately respond to requests for comment. Continue here with the article. So there's a number of oil companies. Excuse me. There's a number of natural gas and LNG companies that were asked to comment on the article, and they denied comment. So these are companies that are hurt. Their share prices, though, I have some podcast listeners who were invested in Gazprom, and they told me that this week on that news, their share prices collapsed. China is one of the world's top gas and LNG importers, so any cancellation of the purchase is expected to have a big impact on prices. The force majeure, if you're not familiar, that's a FORCE MAJEURE, is a clause in contracts typically referring to unexpected external circumstances that prevent a party to a contract from meeting their obligations. So PetroChina meets 40% of its total gas needs through imports, and about 70% of imports are through pipe gas from Central Asia, Myanmar, and Russia, while the rest are through LNG. Sources said for the article, the supply cuts will fall on suppliers proportionately, but LNG suppliers will have a lesser impact versus those on piped gas. And it was not immediately clear what volumes PetroChina had declared force majeure on or the time period the notice covers. But one major LNG supplier to the Chinese company told Reuters that PetroChina had requested some cargoes be deferred till the third quarter instead. So that means that PetroChina does not want some shipments for at least 6 months. So that's at least September, at least October of 2020. So that is how bad things are in China, despite some of this spun, very optimistic, overly optimistic, I would say economic propaganda data that is still coming out of China. So there is a lot of anecdotal data that China is trying to restart their factories, even in Wuhan and other cities. Some economic production factories, people going to restaurants, but people are getting infected, mass gatherings of people, probably not a good idea. So I think the oil bloodbath is still likely. We are in an oil price now barely above $40. It is almost back to 2008, 2009 levels. Things could get a lot worse before they could get better. I am not long any oil stocks right now. My Patreon account contributors were warned about this 3 weeks ago, I want to say, maybe a month ago. So I have a number of different articles out about the oil market. I have a number of different articles here if you want to read more about the oil market and the bloodbath, how bad things are getting. So despite massive OPEC production cuts, and OPEC is now fighting, because OPEC countries, most of these countries need oil revenues to run their to pay for their social programs, to pay for their government budgets. They have a disproportionate amount of oil price revenues. Russia does not want to cut oil production. So they're fighting with the Saudis and the rest of OPEC over this. I have not heard, even though there are a lot of people infected in Iran, I do not trust any of the Iranian coronavirus data. I have not heard from anyone yet that Iranian oil production has been cut, but it would not surprise me. I have not found a story saying that Iranian oil production has been cut. I was going to ask Shy Girl Tracy Schuchart about that in a question. But Chinese oil companies have been dumping oil for many, many weeks now. I don't know exactly how long, but it's been a while. I spoke with Tracy Schuchart, Shy Girl, about this in some messages, and she said it's been going on. Chinese oil companies have been dumping oil and refiners, Chinese oil companies, Chinese oil trading houses have been dumping a lot of oil for cash because they're not expecting bailouts. That's how bad things are. Mark, what may happen, Mark, is Mark says he just saw an ad when he logged in, so monetize hopefully. What may happen is it may run ads for an hour, and then 2 hours later the ads will be turned off. And I might not get any of the ads. No, I'm not sick, I just have asthma. So my allergies flare up. But thank you for asking, I appreciate it. Pebbleman sends the super chat. Did I see the last minute pump on the Dow? No, I did not. I'll take a look. But it doesn't surprise me. All these markets are manipulated and rigged. Although now you have a lot of professional money managers that are in extreme risk off mode. No stocks, no long stocks, not even gold stocks. A lot of these hedge fund guys are starting to put on a lot of short positions. Jeff says the cure for low oil prices is low oil prices. In the long term, yes. In the short term, no. A lot of this oil production is subsidized, is not for profit, is inelastic. A waste of capital, especially shale oil. But a lot of OPEC countries are willing to produce oil at a loss for a while and hope to make it up on revenue. This is why historically, when oil prices drop a lot or crash, OPEC countries, national oil producers, do not cut oil production. Some of them even increase oil production. Charles says he'd like to enjoy cheaper gasoline prices for a while. The oil companies can take a hit for a while. I don't know how much longer some of these oil companies can. If they're higher cost producers and have too much debt on their balance sheet and they haven't hedged their oil production at a higher price, they're going to be in big, big trouble. Another 6 months or a year of this and there's going to be wide-scale bankruptcies. And there was already a lot of bankruptcies. Mark says Sam Zell stated he is buying energy. Any thoughts what he is referring to in energy? He's probably buying like the Exxon Mobils and the Chevrons and the Royal Dutch Shells for the dividend. ExxonMobil has a 7% dividend, I think, right now. I am not a buyer of oil and energy stocks right now. I think there's going to be more bankruptcies. What I would like to see, in my opinion, is companies like Chevron. The main critics for Chevron say that Chevron does not have enough oil production growth. I would like to see companies like Chevron that are extremely well run, and I don't think Chevron is a buy right now given how much worse things can get in the oil market. But long term, what I would like to see companies like Chevron do is focus on buying really quality oil production assets with more reserves and more production growth that's lower cost, and adding that to their growth pipeline and try to buy up those assets for pennies on the dollar. So in the short term, those stocks could go down more if they were to do a smart long-term acquisition. So you could see these stocks, if Chevron were to announce like a big acquisition of one of these larger mid-tier independent companies like EOG Resources or one of those others, you could see Chevron stock go down substantially in the short term, but long term it would probably be a smart deal for Chevron to go on and buy quality assets for pennies on the dollar. So that's what I would like to see the industry do. Unfortunately, the oil industry tends to not do smart deals like that. ExxonMobil did a very dumb deal years ago when Rex Tillerson was CEO. So besides him doing financial engineering with share buybacks to try to move the stock price higher and for him to get richer, I do not think in hindsight he was a good CEO at all. They bought XTO Energy at the very top of the natural gas market. They have $30 billion in write-downs, ExxonMobil does, that they have not written more than $1 billion or so off. They should write it down. I don't think they will, because that would hurt the stock price. So they're just going to pretend they didn't make that mistake. Another chatter about stimulus for energy sector. I don't know what stimulus they can do. So what China or the U.S. could do is increase their strategic petroleum reserves, but China already has four of them. I think China keeps building strategic petroleum reserves, and they already have 4 of them. I don't know how much more, but the stories are coming out now for weeks that Chinese oil companies have been dumping oil for cash. That's how desperate things are in China, and no bailouts. Not every Chinese company is getting a bailout. So unless maybe the U.S. rebuilds the strategic petroleum reserve or Trump doubles it or something, I don't know. Maybe the Wall Street banks will forgive some debt for shale oil companies. I don't know. It's tough to say. The rules could change, but all the pressure, the demand side for oil looks bad. The global economy and Chinese demand looks very, very bad. People are not traveling at all for coronavirus. International travel, people are voluntarily canceling vacations or business trips. I've heard a lot of stories on social media and Twitter. Dr. Ben Hunt and others posted stories about how people are canceling. Dr. Ben Hunt of Epsilon Theory, former professional money manager, about how people are canceling trips to Las Vegas for hotels and casinos. They're canceling reservations 3 to 6 months in advance still. So that's really going to hurt the hotels and casino stocks. Lynn Alden just put out a very interesting tweet there about problems with the Marriott balance sheet. So the travel companies, I've been warning people about airlines, travel companies, hotel and casinos, stuff like that, related companies like that, excuse me. And there's an extensive piece on Disney behind the Patreon account paywall. There is stuff in that article that I spoke to hedge fund manager contacts that told me they were short Disney before I started researching it that they didn't even know. So when I brought it up to them, they were impressed that I found that stuff out. Okay, well, that's it for this short little live stream show. I will put all the articles in the information and description section, but a 10% down move day in the oil price. Very, very bad. Okay, we are at levels now where a lot of deepwater offshore companies, the drillers, are in big, big trouble. You have to watch the day rates. If the day rates, which went up 75% for these deepwater offshore companies to lease their rigs, they went up 75% in 2019. It was a big, big rally. If those fall, you're going to see bankruptcies in less than 2 years, a lot of them in the deepwater offshore companies. It looks like Seadrill could be bankrupt in under a year now. Seadrill shares were below $1 last time I looked. That would be the second bankruptcy for Seadrill in only a couple of years. Just a really sad situation. The investment bankers and restructuring experts really screwed that one up.